best in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
It is Monday, November 3rd, 2014. You know what that means. And if ever there was a Manipulation Monday, it's today. And that's why we've got Andrew Hoffman with us. Andy, so talk about manipulation, huh?
Well, it's actually Manipulation November.
Yeah.
I mean, of course, we have the FOMC, the end of QE, or as I wrote, end of QE, LOL. And then we have the elections tomorrow. But more importantly, we have the Swiss gold referendum, which, the initial polls had the yeses in front. I mean, this is early on, but we've already seen the propaganda game get picked up. We've seen Egon von Greyerz, who is, a major proponent and leader of the effort. We had his PayPal account was frozen so people couldn't donate. So, I mean, this is going to be a month-long war by the powers that be to try to make gold look as bad as possible so that it doesn't pass. Because let's face it, if it passes, they're done. The gold cartel will be over. I mean, it will be pretty shocking. But when you talk about buying 70 to 100 tons of $70 to $100 billion worth of gold, and of course the price will soar if there's a yes. That we're talking about. A tight demand balance that will be thrown, over the edge.
Hey, and if ever there's a country that's a Second Amendment country, right? It is Switzerland.
Right. I mean, it's ironic because this whole thing, I wrote back in 2011, I wrote about the point of no return, which was in basically September of 2011. That's when the U.S. had lost its credit rating and we had the sovereign debt issues all over Europe, and the stock markets were cratering, and gold was hitting $1,920 an ounce on Labor Day. And then that very night of Labor Day, the Swiss National Bank devalued the franc and pegged it to the euro. And that was a watershed moment for the European continent. And of course for gold, because that's when they went all in with their A, naked shorting, and B, selling whatever they still have left of the physical inventories. And here we are 3 years later. The global economy, and particularly Europe, is a shambles. The euro is in literal free fall right now. People don't realize when people worried, gold's down, so they won't vote yes for the referendum. Yeah, but so is the euro that they're pegging the Swiss franc to, which is in free fall because of what the ECB is doing. So believe me, the Swiss aren't happy. And now recall, because of what Japan announced on Friday, which we'll talk about in a second, the ECB's got a meeting this week. They may well step up their, NERP and QE effort just as a result of that. So we're talking about final currency war. We're talking about plummeting currencies. We're talking about, the potential end of the line for the cartel if the Swiss referendum passes. And, then, you go across the board with this fake end of QE because, for one, they didn't actually end QE. It's a big lie. And for two, of course, they're going to have to start it up again as soon as they lose control of the markets.
Yeah. Hey, look what the 10-year is down to, right?
Yeah. I mean, it's 230. I mean, everyone did, it's up from where it was. Yeah. You had a liquidity vacuum day, which showed how the high-frequency trades can destroy the market. But for the most part, it's sitting down at its lows. And, I wrote last week, 2.2% is the new 2.6% because now they're desperately trying to push rates up from there. So it doesn't look like everything is so bad. It's just it's a giant house of cards. It's falling apart. You look at, they put out, again, I wrote Island of Lies a few months back about how the only strong data they get are these stupid PMI, diffusion indices. And you look, right. The Chicago PMI surged, but then you look at today, construction spending was down. Durable goods orders was down. I see factory orders expected to be down. And the same was last month. Last quarter, we had supposedly 3% growth. But again, all the data showed that nothing happened. So, the world is catching on to it. And, this whole thing with Japan is really going to take the money printing into another level.
Yeah, mortgage applications way down, right?
Mortgage applications, home buying. I saw that first home ownership is down 30%. Poverty is up 40%. I mean, I see GM's channel stuffing is back up near its all-time high, the subprime, all this. I mean, any data that's real, and again, even the real data is fudged, but all of that data is showing the same thing. Heck, we've had 4 straight months of falling home prices. It's a fact. This is what they've reported. And this is with mortgage rates at their all-time lows. So what is that telling you?
Yeah. And the mortgage rates have gone lower in the past month. And it seems with some minor exceptions, home sales are still down. So
yeah.
What does that tell you?
From an economic perspective, we long past that pushing on a string, marginal return of zero or negative a long time ago. Now it's just a matter of keeping rates down simply because we have the world's largest edifice of debt. Actually, everyone does, from Japan to Europe to heck to even China. You name it, across the board. I mean, the world can never, ever have higher rates. They're going to get them when we have hyperinflation. But as far as a policy standpoint, allowing rates to rise at all will destroy everything. And again, everyone's all focused on these falling rates, et cetera, but they don't realize that it's not falling everywhere. I mean, the Pigs bond, which started the whole thing years back, are on the rise again. I mean, Greek 10-year yields have jumped 200 basis points in the last month. The Greek stock market's down 35%. I mean, this is king pig here, right here. So when you talk about, is the ECB going to step up QE? Well, of course they are, because Greece alone, with all the debt that their banks owe to everyone else, will take down the whole system. We learned that quite well in the last 5 years. So yes, you're going to see the ECB really ramp up the QE. I don't care what the German Constitutional Court says, because they have to. And now, because the Japanese of what they're doing, they need to destroy the euro even more. And the funny thing was, on Friday, when Japan made this crazy announcement, the U.S. Central bankers were not out attacking Japan. They were attacking the euro. The ECB saying you're taking this too far with devaluing the euro. Meanwhile, Japan is down. The yen, as I look, is down 6% in the last 36 hours of trading. And again, I wrote the real yen bomb starts now. Last year, when they started with the whole Abenomics, and I said, look, the yen was at one point in the past, not too long in the past, in the 80s, 200 to 300 to the dollar. And I believe with every ounce of my being that it's going to go there again. They already have the most expensive society on the planet, despite what they talk about deflation. And when it goes to $200 to $300, 2 to 300 yen per dollar, it's going to be hyperinflation. And of course, it's going to, have massive retaliation efforts from all the other central banks that are losing market share in the manufacturing business.
Is there any bright spot on the planet here, Andy?
Economically, I mean, when was the last time we had one? I remember back in, I sold my last share, not mining share. I got out of those 3.5 years ago, but my last actual stock in April of 2000, which is now 14 years ago. And my premise was that this is as good as it gets. Now, I could have never imagined that it would have gotten this bad this quickly. But the point is, I haven't been optimistic about the global economy for 14 years now. And now it's so much worse than it was back then. I wrote a piece called Good Old Days, actually referring to 2008 and 9. When you look at what the European economy looked like back then, and, let alone where we were in 2000. Mm-hmm. Yeah. 2000, of course, that peak was an artificial peak as well, created by none other than Maestro Greenspan, who infamously, it was out on the circuit last week. Bill Holter saw him, and then he was doing other interviews everywhere, basically saying not only did QE not work, but that, yes, as we suspected all along, the Fed is not in the slightest bit independent. I've said it all along. It's just a government agency. I mean, who do you think appoints these people? And, of course, you should buy gold.
Yeah. Mm-hmm. Yep. Absolutely. Yeah, just buy gold. I mean, that's the funniest thing coming from him, of all people. And it was a shame because Bill was telling me that the moderator there messed up the question about leasing gold.
They always do. These people are all idiots. They all screw up everything. But even if he got it word for word, or Bill himself had asked the question, he still wouldn't get a straight answer from him. And more importantly, no one even cares anymore. I mean, Greenspan could have said, you know what? All those years I was lying through my teeth about everything I said and everything I did. And still it wouldn't matter because we're in a world of rigging and manipulation and stupidity, where again, there's only a few things that can trip these guys up. And, one of them is the gold market, which is why this Swiss referendum is so important. I mean, it's going to happen anyway. Just in this last couple of weeks, we're seeing soaring physical demand. I mean, 2013, they're smashing paper prices. We had record world gold and silver demand. Well, here we are in 2014, and it pretty much looks like silver demand is certainly going to be at least the level of 2013, but gold as well. From the numbers you see, it's harder to get numbers now because China has all this gold going into Beijing instead of Hong Kong. And also the tariffs in India have made a big black market. But the numbers that we're seeing that are visible look like it's about the same as last year. And, of course, you look at on Friday afternoon, the U.S. Mint put out its final numbers for October. October was 5.8 million ounces sold. That makes it the third largest month ever. And more importantly, it's the largest month that's not January. Because remember, every year in December, early December, mid-December, the Mint closes down and starts gearing up like with the car industry for the next year's issuance. So January is always the biggest month because of all that backed up demand, people buying in December. And here we have October almost made it to the second highest month ever here in October while they're smashing the price. And of course, 2014 is well on the pace now to exceed 2013, as is the Royal Canadian Mint. And the amazing thing is, as I've told you before, because I work at one of the biggest bullion dealers here, it's not Americans and Canadians who are buying them. I assure you, I am so positive that it is the Chinese, and I'd say Russians, but Russians don't, unless it's the Russian government buying 1 ounce coin. I am pretty sure that it is the Chinese and perhaps Arabs that are buying up all of the U.S. Mint and Royal Canadian Mints silver. And, I'm sure you've talked to Bill in Harvey, Oregon about this incredible rise in the open interest. And assuming it's true, I mean, what entity can be taking on this kind of loss? It went up every day last week to nearly record highs. So there's something going on. We're now seeing big drawdowns. Obviously, we talked about Shanghai silver. We're seeing huge drawdowns now of both COMEX gold and silver. The GLD is seeing big drawdowns. Something is going to give soon. We've even seen junk silver premiums start to rise in the last week. Again, when does it end? I don't know, but is it far away? I doubt it.
Yeah, it looks like it's getting closer and closer. Although to look at the nominal prices of gold and silver, you'd think that gold and silver are not the place to be.
Well, I mean, that's what their goal has been all along, to make you believe that. But the fact is, this is not the first time in history that they've done this, and it's been different days all along. I mean, gold and silver have been suppressed in one way, shape, or form for the last 500 years, and we've had cartels destroyed as recently as the 60s, and the 70s when the price soared, and it's going to happen now more than ever. Because this is a global market now, and supply is as low as it's been, and supply is only going lower. I mean, I wrote the other day, kamikaze attack and the end of mining. It was two separate topics, but I mean, we're talking about, if the year ends right now at $16 silver, I mean, the write-offs, there's going to be no business left. You can call cash costs, all-in costs, whatever. There's going to be no silver industry left. And by the way, you have falling base metal prices too, which is certainly not going to help any. And the same thing goes for gold, only to a slightly lesser extent. I believe that not only is production peaked, but it's going to go down dramatically. In our seminar, our webinar we did 2 weeks ago, there was a universal expectation that at anywhere near these prices, you could see up to a 50% decline in silver production in the next 5 years. And I've been saying this all along.
First Majestic is holding back all their production. They're not selling anything, like over 1 million ounces. They're not letting anything onto the market, right?
Well, I mean, eventually these kind of things have to happen. To me, I think it's going to be less because of mining companies, because, First Majestic is one of the few that actually is not financially crippled and can afford it. But again, you heard him. He can only do a little bit because at some point he's got to pay his bills. It's going to be more on the supply side because the industry won't be able to produce anymore at these prices. No. And good for Keith Neumeyer, who's, he's one of the few guys. There's only a handful of them that even understand what is going on in their own industry.
Yeah, you got that right. Like him and Jorge Ganoza, couple others, but yeah, I mean,
I think Sean Boyd, the guy, what is he at Yaman or Agnico Eagle? It's another guy who spoken about these things, but you'll never hear it from one of the mainstream guys. But again, I can't emphasize enough what is about to happen in the mining industry. It's going to be no different. Yeah, it's going to be no different than what happened when I was an oil analyst back in the late '90s. Oil went briefly below $10, and that's with a cartel that helps prices. And everyone merged: ExxonMobil, BP, Arco, Amoco, Chevron, and Texaco, Atlantic Rich. What do you call it? Unocal and Phillips, or not? Was it Phillips and Conoco?
Yeah, Phillips.
But then they paralyzed for years, and that's exactly what's going to happen now. You watch Newmont and Barrick, who've been talking about it forever and pretending they're not going to do it. You watch them merge, and wait till you see what kind of. I mean, they both cut CapEx by 60% this year. Wait to see what they cut when they get together.
Yeah, and the amount of CapEx going into mining now, it's going to go turn negative soon.
When it comes to exploration, there's none. I mean, the exploration has always been the juniors. Yes, the majors do exploration, but I would say the vast majority of what the majors are spending on is development. And it's always been the juniors. The juniors, I left the junior mining industry 3+ years ago. It was dead then. And I said back then, you're going to see half the juniors go bankrupt. And I would say on a practical basis that more than half, probably 3/4 are bankrupt. Yes, some of them still have shells around. They have no money. But there hasn't been any discoveries. There hasn't been any exploration for a decade. I mean, remember I wrote 2 years ago that article that was called One Discovery in a Decade Gone Goodbye. That was the Fruta del Norte in Ecuador. It was discovered, I think, 2006 by Aurelian Resources. And then Aurelian was acquired by Kinross. And then Kinross wrote the whole thing off because it spent 5 years arguing with the Ecuadorian government who wants like 75% royalties. That's the only discovery of note in my entire 12 and a half years in this business. And that was when there was exploration back then. There's been zero exploration. I worked for dozens of junior miners in investor relations for a couple of years. None of them were doing anything because none of them had any money. And that was 3 or 4 years ago.
Yeah, I know. And that will be looked upon, Andy, as the good old days, right?
Again, it is a good old days. I remember back in 2011, the juniors had a secondary peak. They got smashed into 08, 09, and they went up, obviously not like they, where they were back in the 05 to 07, but they did move back up a little. The thing is, they still didn't have any money. But they were able at the time to do these horrible financings with the Canadian banks that obviously naked short them so they can get more warrants. I mean, that's the game they played forever. But all they would do would get enough money to stay alive. Now they can't get enough. They couldn't even get a penny to eat. I mean, they're homeless, these people.
I know. Industry that millions of people used to rely upon, and now it's basically gone.
And it's not just about money. It's people. Look, when I was in the oil industry, again, I worked at Solomon for 7 years. I was award-winning analyst doing sell side. I spent my life in oil and gas, and I watched what happened. They had parallel to gold and silver. They had a major depression starting in the early 80s all the way until the mid 90s. Yeah. And so what happened was everyone left the business, and the average age of the average geological engineer got up into the 60s. And then worse yet, even when the money came in, the business changed. It became ultra deep water and all these horribly difficult things that only a young man can do, and it became outdated. So you didn't have any personnel. Finally, after a decade of a bull market, people have gone back into the oil industry. Of course, too many of them have gone into the shale business, which is going to implode at the current prices. But in gold and silver, we had a bear market for now 30 years as far as personnel. Yeah, I mean, the price went up a little, but there was never really enough capital there because of all the suppression of prices and stocks. And as a result, here we are, where just like oil, the business is so much more difficult than it's ever been before. And there is there's no money to pay people, even if there were. And there's certainly no one taking geology and mining engineering in school. So I truly believe the mining industry is dead and buried forever. And yes, when the price of gold and silver go up until the mines get nationalized, which they of course will, there will be some people that come in and some money that comes in, but there is no way that they will ever bring back the type of production levels that they once had.
Yeah, I couldn't agree with you more. The industry has just been decimated, and what's that going to do to the price of gold and silver?
Well, I mean, you wouldn't even need any of these things. I mean, if supply would go up 5 or 10% a year, and it wouldn't matter because it's so little compared to how much demand is out there and how much there will be when, the powers that be start to lose control. But what you're going to see is not only is demand going to soar, you're not going to see flat production. You're going to see plunging production. And that's especially true with silver. If silver even remains anywhere near, and we're talking about now the cost of production for the world's best mines. The best miners, they need $20 to $25 silver. Otherwise, they report net income losses. I don't care what they say their cash costs are, or even their all-in costs. It was funny. I wrote in that kamikaze attack in the end of mining. Newmont Mining has the goal to say their all-in costs are $10.20 to $10.80. I mean, the price of gold just fell 3% year over year, and their earnings fell 50%. And I did a chart showing that their reserves are the same as they were back in 2007 when the price was $500 an ounce. So no matter how much the price has gone up and how much earnings and capital they've gotten, they can't replace reserves. Believe me, they need far higher numbers, which is why I believe far more the Goldfields CEO, Nick Holland, who last year said, the industry needs $1,500 gold to survive. I think that's far more likely what the real number is. And I think for silver, it's $30 an ounce. There's no doubt in my mind that there's no way we have a chance at ever getting increased production without $30 silver.
Yeah. Yeah. It sounds eminently reasonable. And man, it just... I'm happy I'm not in the precious metals exploration or production business, I'll tell you.
That's right. And that's why I've been saying all along, until mid-2011, I owned mining shares, and I got out of them for all these reasons. And I've been very vocal about it. And I also worked in the mining industry until mid-2011. It's the same thing. I mean, we're not in this game to make money. I was way back when it was offensive investments. Now it's pure defense. My goal is to protect myself over time from what's coming. And if you want to invest in mining shares or all kinds of paper stuff, good for you. It's just speculation, though. It's not owning gold and silver. And there's no guarantee, even if gold and silver do go up, that mining shares will go with them. I mean, they probably will to some extent. But again, it's speculation versus saving. Your choice.
Hey, and that's something I'd like to just talk about. People always point out to the 30s, oh, look what happened to mining shares then, when the government raised the price of gold and mining shares went up, 1,000%, 1,500%, but times were a little bit different then, weren't they?
Yeah, well, I mean, it's all these things. The technical analysts talking about what happened in the 70s and people in the 30s. I mean, look, in the 30s, the dollar was still backed by gold. And of course, in the 30s, the price of gold was fixed. So, I mean, you can't compare any of these times. But the fact is, during the Great Depression, anything that was gold related went up in price. Yeah. We're never going to have deflation again. Yeah, sure, we may have we have stock markets or real estate markets go down, but that's not deflation. That's called popping of bubbles. Yeah. The fact is, the money printing, i.e. inflation, will keep going. It will never, ever stop.
Yeah, and that is the definition from the Austrian standpoint of inflation: increases in the money supply, not increases in consumer prices. You always got to emphasize that because so many times you forget. We're not talking about prices going up. We're talking about increases in the supply of currency units, right?
Right. And of course, the two are related, obviously, but it's more, as I wrote many times, want versus need. The things, or need versus want, the things you need go up in price, and the things you want go down in price. I mean, that's what happens in a recession. Where they're printing money. Time to time, certain things go down. I did an article last week called Media Nightmare, where I showed that the average family in this country must borrow money every year, based on the average median income. But people go, oh, well, gasoline prices are down. Yeah, look at my chart, okay? Gasoline price is a very, very small part of the average person's budget. And by the way, $3 per gallon gas is higher than it's been 90% of my life. It's not really low at $3 a gallon.
Compared to what it was a couple of months ago, then it went down. Anyways, find Andy's work at milesfranklin.com as well as Bill Holter's. And really want to take a look at Bill Holter's work about the New Orleans Money Show, Alan Greenspan's presentation there, and Doug Casey and Chris Powell's, I wouldn't call it a debate exactly, but their discussion. And subscribe to Andy's work as well. Go over to financialsurvivalnetwork.com and subscribe to our newsletter, and make sure you check out the site, all of the various articles from all over the place that webmaster Stefan manages to find and locate for you, for your benefit, because you're just not going to find it if you're looking on the mainstream media, CNBC, Fox News Channel, whatever it is. You're just not going to find these things there. Andy, next week, we'll talk to you then. Be well.
You too.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.